Hi, welcome back to Easy Insurance Tips. In the last video I explained what life insurance was. In this video I'm going to quickly explain how we arrive at the sums assured. The easiest way is to use our Easy Insurance Planner, which you can access on this website, or you can work it out for yourself. Essentially the 5 or 6 things you need to take care of in the event of your death. You need to take care of final expenses. This is essentially your funeral costs. You also need to take care of your debts. You want to make sure your family's left debt free. You don't want your family to have to continue to pay your mortgages or your debt when you pass away, particularly on one income. The other thing we take care of is kids' education costs. If you've got children that are going to university, it's going to be difficult to help them on one income. You may be wanting to pay for that for them, so we make sure we set aside enough to cover university fees, etc. The next thing we look at is how much lost income is there going to be to the household. At the moment you're probably earning 2 incomes. Even though you're paying a mortgage out of 2 incomes, there's still going to be a substantial loss of income to the household. So we work out how much that loss will be, calculate how much lump sum we'll need to provide you to cover that income through until you would have turned age 65. And then we can just talk about when or how long you want that benefit to be paid for if it's less than that. The last thing that we look at taking care of is pre-funding your retirement plan, because it's going to be difficult to save for retirement on one income. You may or may not have already started saving for retirement. We do take that into account. And then any bequest you choose to make or leave to your children, or SPCA or anywhere else like that. And that's essentially it. The other thing we do is we take into account any assets that may be offset or it may be sold to offset the amount of insurance that you need. This could be a rental property, it could be a batch, it could be your share in a business, or it could be that big boat that you love that your wife doesn't like very much and would sell as soon as you're gone. So we take that into account as well, and also any other insurances that you may have, and that leaves you with either a shortfall or a surplus. But that's it. Catch you next time.